Hello, everyone, and welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be talking about how to manage risk during geopolitical uncertainties. So as you may have already noticed, there is currently a war happening in Russia versus Ukraine. Then we have the expanding geopolitical tensions in the Middle East, mainly between Israel and Gaza, now expanded to Lebanon and other countries like Iran getting involved. And this is having a significant impact in the markets. So we'll be talking about that and try to understand the risks, the opportunities, and how you may schedule your trades. So as always, I'll begin with a disclaimer that this session is not investment advice. It is not a recommendation to trade, so you should always do your own due diligence. So let's get things started with the economic calendar. So today, being Thursday, the 3rd of October, we have quite a number of things happening. One, we have a number of bank holidays. So from China, we have the National Day. So the Chinese people are celebrating the National Day. So market is closed. We are not expecting much of price action from there. Then from the Eurozone, we have a German holiday, which is basically called the German Unity Day. So also the German market will be closed. Earlier on, we had information coming in from Switzerland showing that the monthly CPI came in at negative 0.3% for the prior month of September, basically showing that inflation is moving considerably as expected. So nothing to worry about here, except the expectation that the Swiss National Bank may consider being more aggressive with rate cuts. So from the other economic calendar, this is the trading economics calendar. We also have data coming in from Turkey, where inflation month over month was up 2.97%, which took the year-over-year inflation to 49.38%, which is still significantly a very high number. So for the rest of the day, we'll be expecting quite a number of announcements. Some of the main ones include, one, the weekly unemployment claims from the US at 3:30 p.m. So in this case, we're expecting 222K compared to the previous reading of 218K. So we'll be looking at the final services PMI, which is expected at 55.4, same as the previous reading. Of course, we know that numbers above 50.0 represent expansionary territory. Then Institute of Supply Management Services PMI is expected at 51.7, slightly higher from the previous reading of 51.5. So factory orders in the US are expected to have increased by 0.1%, down from an increase of 5% in the previous reading. We'll be having one more speech from FOMC member Schmid. Then we'll be getting the natural gas storage data, as well as another speech from FOMC member Bostic. So also to mention that yesterday we had the ADP non-farm employment change, which was higher than expected at 143K, up from 103K, which was an upward revision from 99K. So in the previous reading, we had 99K. In this reading, we had an upwards revision of about 4K. So getting the previous month's data, I believe this is August, to 103K. Then for September, we had 143K, which could be taken as a leading indicator into this Friday's non-farm payrolls. So on Friday, this is when we are getting the official non-farm payrolls. So as for the previous reading, we had 142K, and we're expecting an increase to 148K. Remember, this is the main event of the year. So, of course, we will be expecting a lot of volatility in the markets rising from the US non-farm payrolls. So, as usual, the general trend has been downwards, as you can see. So, all we have been seeing is generally the non-farm payrolls getting weaker and weaker over time. And in this case, surprisingly, we're expecting an uptick in the US non-farm payrolls, which is expected to be positive for the dollar. But if it drops below expectations, then in that case, we should be considering less than expected non-farm payrolls to be negative to the dollar. So as we continue, checking on the comment section, good morning, Noniza Jack. Good morning, Maureen, Tropsked, J Squad. Thank you for joining. Wangari Patrick, thank you for joining. And Dennis Mwangi, thank you for joining. So if you have any questions relating to the presentation, feel free to type that in the live comment section. And these will confirm that everything is working just fine. Just checking on my volume to make sure it's high enough for everyone. Perfect. So now that we know the events that we're expecting in the economic calendar, it's time that we highlight what we have been seeing in the market so far. So if you just take a quick peek at the Al Jazeera website, you'll notice some of the key highlights in the markets. One, anxiety and fear abound in Lebanon as Israel strikes without warning. So we saw it earlier in the week. Iran sending missiles to Israel. And now we are seeing Israel responding and targeting Lebanon, and the whole geopolitical scene is basically just getting ugly. So if you look at minute by minute coverage, collective genocide taking place in the region. This is Qatar. Israeli forces down drones from Lebanon. What to know about Iranian and Israel missiles. Anxiety, fear abound in Beirut as Israel military attacks without warning. This was always going to be very different from Gaza. Israel bombing in central Beirut threatens to drag Lebanon into war, and so many other updates about the escalating geopolitical tensions in the area. So what happens when we see geopolitical tensions in any country? So that's the question we'll be trying to answer this morning. And the one thing that you're supposed to remember and take this home is that whenever there is war, especially in the Middle East as well as in Europe, the number one asset that tends to appreciate during such periods is the US dollar. So a lot of investors have complete and utter trust in the US dollar. And as a result, they use it as a safe haven whenever there is uncertainties in the market. So they'll tend to go for the dollar as a safe haven asset. And this is during a period when there is what I would describe as a risk-off environment. So whenever investors are risk-off, most probably they will go for the US dollar. So they will create an insane demand of the dollar, and you'll find the dollar strengthening regardless of what's happening. So also a quick peek at BBC, the British Broadcasting Corporation. So any feeling of safety is vanishing. Israeli strike on central Beirut kills 6. So, so far, I think this is the most dominant of the news. So even though we just entered October and we're just a month away from the US elections that are set for November 5, right now, a lot of investors are worried about the developments in the Middle East. So as I have already mentioned, that's the key expectation for the dollar. There are also other expectations. Of course, we know that war is not very good for companies. So stock markets tend to take a back step. So when investors switch from risk on to risk off, it means that they are less willing to invest in risky assets. So risky assets, in this case being considered stocks, you'll notice that most stocks will be going down. An example, if you look at the Nasdaq over the last couple of days, it has only been erasing some gains since mid last week. If you look at the Dow Jones, it's the same story, and SP 500 is also the same story. The Russell 2000, which represents small caps in the US, is also the same story. They have all been losing ground over time, and this is specifically for this week. So main reason this has been happening is because of the geopolitical developments that are currently happening in the Middle East, and a lot of investors switching from risk on to risk off. So also, safe haven such as gold sometimes may underperform compared to the dollar whenever there's geopolitical risk. So, well, the dollar index this week has been extremely bullish. So, since the market opened on Monday, all we have been seeing is the dollar index being pretty strong. So, this being the fourth day of the week, this seems like a continuous trend, and we will respect that and enjoy trading in a market where the dollar is currently very strong. So we'll be looking for positions that don't undermine the strength of the dollar. So having seen that, if you look at the Euro USD currency pair, we were expecting a bounce from here. This did not play out, so the market broke towards the lower side, and now our target was turned to 1.10074. So right now, we are seeing the euro attempting to make a comeback, but overall, the expectation is that the euro continues losing to the dollar and eventually gets to this premium support area, which is around 1.10074. So for pound USD, we've seen the market break a major support area here and head all the way down. So far, it's a major sell-off, especially after one of the central bankers from the Bank of England mentioned that they need to aggressively cut interest rates. So that led to a big sell-off of the pound, and there's still more room for downside. In this case, with an expectation that we get to 1.30423. So this is the overall expectation for the pound, that we keep seeing the prices dropping. And if there's 1 week currency to be targeting for the day, that should be the pound. So I saw a comment basically asking about pound yen. So currently the pound is pretty weak compared to other currencies. So it would make more sense to be looking for opportunities to short the pound. And in this case, when you compare this with the yen, then there is that likelihood that we eventually eliminate all the gains we had made yesterday. So after a very strong and bullish Wednesday, now we are seeing the exact opposite happening on Thursday. So there's that likelihood that the pound continues losing and gets to yesterday's low around 190.547. So for AUD/USD, all we are seeing is something where we had already predicted here on Tuesday that the market would drop to this area. So there was a pullback to the previous support, now turned resistance, and now the market has broken to the lower side, confirmed and continued, which makes our next target to be all the way down. So we should be looking for an extension of this bearish momentum down to 0.68193, which remains as the next target for people shorting the AUD/USD currency pair. So for USDN, we are seeing an extension of what we discussed on Tuesday, that the market is now in what looks like a loudspeaker kind of formation. So on Tuesday, we had seen the market stall around here, but the expectation was the rally to extend and get to this area here. So down, we are seeing a continuation of the same. So perhaps even a likely breakout towards the upper side. So in this case, if you look at the most recent highs, so I'm just trying to highlight them here. And then you compare with the current price action level, then we know that there's still more room for upside potential for the USD-yen pair. So in this case, potentially breaking and extending to 149.368. However, this is heavily dependent on what happens at this resistance area. So we watch that level to see if there's any signs of a break. The Nikkei 225 index is weakening again. So no longer on that strong bullish momentum we had seen earlier in the year. So clearly, we don't have much playing around here. So we are basically looking at a market that, yes, is facing significantly higher highs as well as higher lows. But when you compare with what we're experiencing currently, so it's a market that is headed right back towards the lower trend line. So from the 1 hour chart, this is how it looks like. As for gold, we have seen attempts to go for a new all-time high, especially on Tuesday. So I remember we projected that this rally would potentially get to this area here, that is 2670, and potentially extend to a new all-time high. So yesterday the market failed and pulled back downwards, and today we are seeing a continuation of the same, which means that it's likely that we will be seeing gold dropping further back downwards and getting to 2631 price action level. So as for Brent oil, it tends to appreciate, especially during times of geopolitical tensions. So right now, as we talk, we know that if there is an acceleration of the war in the Middle East, then that war is likely to lead to supply issues. And if there is no oil supply in the world coming from the Middle East, then that's going to be a big problem. So as a result, due to those tensions and expectations that the geopolitical environment might get worse in the near term, then the worry about supply being cut only leads to speculation that oil prices could be moving higher. So despite having a slowing global economy, there's that expectation that oil prices could skyrocket as a result of this. So also remember, yesterday on Wednesday, there was a heated conversation during the OPEC Plus meeting where some countries in the OPEC have not been obeying the rules of the OPEC. And as a result, they were threatened with either flooding the markets or obeying the rules. And obeying the rules means that they adhere to the supply cuts that were earlier implemented. So far, these countries have not been obeying, meaning that they have been supplying excess oil in the market, and as a result, leading to lower prices. So, the leading country, which is Saudi Arabia, mentioned that they could drive oil prices all the way down to $50 per barrel, but that has not happened yet. And now that we are seeing escalating geopolitical tensions, they take the day. So worries about supply cuts are leading to a strong rally in oil prices, especially from the Tuesday spike, Wednesday continuation, and today being Thursday, it's likely that we could be seeing some much higher prices as investors prepare for a risk-off environment. So in this case, the breaking of this upper trend line will be monumental in determining the trend in oil. So it hasn't broken yet, per se. So I would say that the market is currently retesting the area, and potentially we could be seeing a nice breakout. So a breakout above this area would likely mean we go for bullish positions, and that could be triggered from around 75,364 price level. So US equity indices are currently on a back heel, taking a step backwards. So after forming new all-time highs. So for the Nasdaq, we can already see that it is really struggling with the lows. So we know that there has been some good price action happening during the New York Open. So it happened here on Tuesday. So a big sell-off. Then it also happened yesterday. A big sell-off followed by a bounce from this bottom. And now today we can see the market approaching the same area. So the real question is, will the market be breaking this support area when the market opens at around 4:30 p.m.? So this is something that is very interesting, and we should be watching it actively because a clean break just below that area will likely drive prices much lower, and we could be seeing an extension of the sell-off all the way down to 19,323. And that's during the New York session, following the pullback that we are currently experiencing this week. So for US 30, I think a lot of sentiment has changed. So the new all-time highs we were seeing a couple of days ago seems to be evaporating, and If this be our support, then we should be observing this area to see if there is potential for a break towards the lower side. Of course, if there's a break, then we should be seeing some acceleration to much lower prices, especially around 41,453. So this hasn't happened yet. So my real question I'm asking is whether the market will be breaching here before the New York Open. So also remember that the opposite is also true. The market might bounce from here and head for new all-time highs. But now, considering that we are seeing a risk-off kind of scenario in the markets, it's more likely that the markets will go for a correction instead of forming new all-time highs. So US 500, we're also looking at the same thing. So market on the brink of entering into correction territory, even though we are just very close to an all-time high. So if we happen to see a breach of this area, there's still more room for downside. So a potential extension of the drop to around 56.14. So this hasn't happened yet. So we'll be seeing a break here during the New York Open. So that will be a key question to answer. So at 4:30 p.m., we should be expecting some good activity, especially from the ISM services PMI, as well as the weekly unemployment claims. So BTC continues to expand the bearish momentum, something we had already discussed. So on Tuesday, we saw the market going to 62,542, which it broke and went all the way down, got very close to 60,000. Then yesterday, already hit 60,000, and today it's extending the bearish momentum with potential extension to around 58,105. So there's still more room for downside momentum in Bitcoin. So from the daily chart, this is how it looks like. So we already failed to hit our target here, meaning that there's more strength in the bears in the market. So there's still more room for downside. So once we test the 60,000 price level, there's still room for more downside. So as for dollar trading against the Swiss franc, we're still in a range. We already spoke about this. This is the 6th week that we are seeing the market remaining in the same pattern. So we projected a rally to this area here on Monday. So on Tuesday, struggled. Wednesday already got to the target. And then Thursday, we are seeing an extension, and the market is almost getting towards the upper trend line, which basically implies that as soon as we get to this area, now we start thinking of the opposite direction, as long as the market remains within this range. So the market is already rejecting higher prices, so we should be expecting to see much lower prices. But for now, the dollar is currently still very strong. So the chances of the market getting to this resistance and changing direction are also significantly high. So for New Zealand USD, we are seeing breakout retest continuation. In this case, after the market broke the lower trend line, now we are seeing an acceleration downwards. Of course, there will be some breaks. The market will not be moving in a straight line. So in this case, breaking just below the current price level implies that we could be seeing some more sell side potential. So notice the upper trend line here on the daily time frame, which was broken, but the market has only taken 2 days to get back into the channel. And now there's still more room for downside. And sorry for that. So the previous highs were around this area here, 0.62150. So 0.62150 seems like a nice target. So once the market gets here, we now get to observe to see what happens after that. Of course, this didn't play out. So the overall expectation is that once the market gets here, at least we see a nice bounce. But overall, the dollar is still strong. There's a likelihood that the market could just breach through that level and keep going. However, from the daily time frame, it's a level that was previously used as resistance. So now it could be turned into a support. So we could be seeing some market activity playing around this area here, whether the market bounces or breaks, but it's more likely to stall around this area. So for USD CAD, we are seeing these major revisions. So after Tuesday, we speculated that the market would drop towards this area and potentially go here. This didn't play out. Our original projection played out but did not get quite to the target. So Wednesday market reversed. Today we are seeing a continuation of the same. Of course, the expectation when we consider the strong dollar is that the market at least retests the 1.35372 price level, which was the highest price on Tuesday. So as for pound CAD, the big sell-off continues. So for all pound pairs, they are the weakest in the market, and we continue seeing this selling momentum continuing. So pound CAD is having a big sell-off, and any other pound pair is also going through the same. With the euro pound being the biggest mover in the market, you can see the 4-hour candlestick and how it has performed. So from the 1-hour time frame, this is the strong bullish momentum. From the daily, you can see the big momentum currently happening. So with a change in policy stance in the UK, indicating that they could go for aggressive rate cuts, then the expectation is that we continue seeing the pound weakening. So for European equity indices, they are having a big sell-off this morning, beginning with the French 40 index. So the Euro Stoxx 50 cash index is also selling off. We are seeing the Spanish IBEX 35 also being quite bearish this morning, as well as the German DAX. So not looking very rosy in the European markets today. And as for the trade of the day, trying to summarize here. Just checking to confirm. So a really strong dollar versus a really weak pound only points to one thing. So shorts in pound USD seems like the trade of the day. So pound USD extending down to 1.30423 seems like the potential idea for the day, given that we are seeing a weak pound across board. So there's a good chance that this bearish momentum continues for the rest of the day. So this might as well be the best trade for the day. So that being said, my time is up. So just checking from your guide, from your comment section. Nice trick, J Squad. Of course, I'm not going to fall for this one. So, hello, Rita Wakeo. Thank you for joining. Trapskade and John. And thank you guys for joining. Hello, Dennis Mwangi. We already covered USD CAD. So there is a request to check on Euro Yen and New Zealand Swiss franc. I think Euro Yen is such a noisy chart. We are not seeing much of an action here. So since the market opened, this has been the summary. Market going up and then down, up, down, up. Seems a bit too noisy for me, considering that there are clear-cut chances in other markets. So I wouldn't take that as a favorite. So New Zealand Swiss franc is the other request. So also a bit noisy, but a little bit clearer compared to the previous chart. So I would say that this market has been struggling to break below this area here. So after getting towards the upper side, this was a major support area. So a clean break towards the lower side, extending to this point. So in this case, I would say attempts to break below on Tuesday and Wednesday. Then on Thursday, there's a clean break, a retest, and a continuation. Of course, you can see there's some kind of activity playing around this for the last 3 days. So it seems more of a bearish market for me compared to the bullish case scenario. So yes, it seems likely to be a bearish market. The 4-hour chart seems like a pretty strong rejection for me on the 4-hour. So if you look at the candlestick on the 4-hour, seems like a very strong rejection of higher prices, which implies that we could be seeing a flash spike downwards towards 0.52909. That was the previous high. Of course, if you look at the previous price action areas, this seems like a nice target. Even though short term, there's still more room for downside for the market to get to 0.52864. So last question I'll be addressing here is from All Sports TV. Hey Rufus, if one had not entered in that massive move by Euro Pound, do you think that at this point it would be a good idea considering the huge imbalance that has already been created? No, it's not a good idea to chase after the markets. So if you didn't manage to capture the move, then just let it go. There's high likelihood that the market has already exhausted the high momentum move and now is about to enter a consolidation. So think about it this way: the market has already made this move. So what is the probability that the market makes another move in the same direction or another move in the opposite direction? So this rarely happens. So in most cases, the kind of thing that you'll see from here will probably be some form of consolidation towards this area here. So it doesn't make a lot of sense to be looking for a trade here. So it's more likely that the market will be playing around this area for a while after making the big move where we shift from an impulse to a consolidation time. So in this case, we are more likely entering into a consolidation. So that's why I mentioned that the one that is more likely to make a bigger move is pound USD because it hasn't yet found some form of support. And of course, there is a major support area here. So this area here being a previous resistance turned into a support is more likely to be hit with the current momentum. So there's a good chance that we keep seeing bearish momentum in pound USD, and that could as well be the favorite trading idea for the day. So another question here from Wangari Patrick, and I appreciate this. Immediately Iran hit Israel, WTI and Brent shot up. So if Israel hits back, can we expect a sharper upwards move? Yes, I should be expecting that. So as I mentioned, whenever there's geopolitical uncertainties, especially war, oil tends to trade higher, but the dollar tends to take the day. So we should be expecting to see a much stronger dollar, but also we should be expecting to see some good activity on the Brent oil prices, especially considering that the Middle East is a major supplier of oil to the global markets. So thank you, everyone. Thank you for your time, and I hope to see you on the next session.